All right, you're going to want to pay very close attention to what's happening in the markets because we are seeing this massive divergence, a split that is catching a whole lot of traders completely off guard. The major indexes are selling off, sure, but under the surface, money is rotating aggressively. It really feels like a trap is being set. So, what's with all the doom and gloom? Why are some analysts saying the market is at death's door? Well, it's kind of like a perfect storm. We're going to break down the three core pieces of this puzzle. First, we've got military tensions that are really heating up. Second, we're seeing what people are calling an AI bubble reality check. And third, there are some critical technical signals on the charts that are, flashing bright red.
So first up, let's talk about the geopolitical side of things, because this is the catalyst that sent a huge wave of jitters through Wall Street today. The tension is building, specifically with Iran, and it's having a direct, immediate impact on prices.
And look, this isn't about some vague threats on the news. We're talking about direct military confrontations. A U.S. jet actually downing an Iranian drone, Iranian gunboats threatening tankers. For investors, this stuff just screams risk. It elevates the possibility of a wider conflict, and that immediately sends them running for safety. And here is a perfect example of how that fear translates directly into money moves. We saw a single massive options trade, we're talking over $2.4 million, all betting that ExxonMobil stock is going to go up. It's a simple equation, right? Tensions flare in the Middle East, oil prices spike, and the big money piles right into energy. But here's where it gets really weird, and this is the crucial point. Despite all the headlines about the market being down, a majority of stocks, 55% of them, actually closed higher today. This is the smoking gun. It shows a clear rotation of capital. Money is flowing out of those risky tech names and into safer bets, like those energy stocks we just talked about. Okay, on to our second theme, which flows perfectly from that idea of rotation, the AI reality check. What we're seeing in the tech sector is an absolute bloodbath. And it's not just a bad day. It's a fundamental questioning of this whole AI story that has been propping up the market for years now. Man, this quote just nails the mood on Wall Street right now. The very same AI companies that were supposed to disrupt every single industry, well, now investors are worried they're disrupting their neighbors, like consulting and financial services. The fear is that this revolution is starting to eat its own. So what was the trigger for this sudden panic? It was new software from an AI company called Anthropic that can automate really complex legal work. And that just terrified fund managers. They started asking themselves, wait a minute, if AI can disrupt the legal field, what's stopping it from disrupting our jobs? And just like that, all that hype and spending is being put under a microscope with investors demanding a real return on their investment. And you can see the damage right here. I mean, this isn't just theory. Consulting giant Gartner got crushed, down over 20%. S&P Global, down 10%. And even Adobe, a company that's been all in on its own AI tools, fell 7%. You can see the contagion is spreading, and it's spreading fast. Now, this entire AI drama is unfolding smack in the middle of earnings season, and the reports are just amplifying these deep divisions in the market. It's really becoming a story of clear winners and some very clear losers. This table tells you everything about how selective and, frankly, how nervous the market is. Just look at AMD. They beat their numbers, had record data center growth, and the stock still fell because their future guidance was a little weak. Then you've got Chipotle, which got absolutely crushed after forecasting zero, that's right, zero sales growth for 2026. That's a huge red flag for the consumer. But then you have Palantir, which soared. Why? Because they could prove they were making money from AI today. The message is clear. Promises are out, proven results are in. And talk about a contrast. While all this weakness is happening in tech and consumer stocks, look at this, Walmart. Good old, reliable Walmart, a classic safety stock, just hit $1 trillion market cap, all-time highs. This is that rotation we've been talking about, plain as day. Investors are literally selling NVIDIA and buying Walmart. Okay, so with all that as context, let's zoom out and look at the charts, because the technicals are basically screaming at us to be cautious. This is where that death's door analysis really comes from. First off, we've had multiple Hindenburg omen signals trigger recently. Now, I know, the name sounds super dramatic, right? But it's a real technical indicator, and you don't need to know the complex math behind it. The takeaway is simple. When you get a bunch of these signals popping up, it has historically been a pretty good warning of significant market weakness coming over the next month or two. And this is why traders are so worried. There's a key ratio in the bond market that's flashing a warning sign right now, and its track record is just incredible. It showed up right before the dot-com bubble burst, right before the 2008 financial crisis, and right before the COVID decline. The fact that it's flashing again right now, that's a major, major red flag for the bulls. And all of this brings us to one critical number for traders. This key support level on the S&P 500. The number to watch is 685. You can think of it as the market's current line in the sand. If we break below that level, analysts are warning that things could get ugly fast. A much steeper decline could follow. This weakness isn't just in the broad market, it's hitting the leaders, the generals. NVIDIA, the darling of the market, is forming a classic head and shoulders pattern. That's a technical formation that often signals a major reversal to the downside. And Microsoft is already down big from its recent highs. When the generals start to fall, well, the rest of the army tends to follow. So the big question is, how do you even navigate this mess? Well, based on where we see the big money flowing and all these technical setups, let's look at some of the specific stocks that traders are putting on their watch lists for better or for worse. On the bearish side, you've got traders eyeing Moody's, which is getting hammered by those AI disruption fears. Adobe is looking pretty vulnerable, especially if it breaks that key support level. And Tesla, well, it's just been showing a lot of relative weakness. A break below its support at 414 could trigger a really quick sell-off. But hey, it's not all doom and gloom. On the bullish side, there's that continued momentum in safety plays like Walmart. Then there are these unique catalyst-driven stories, like USA Rare Earths, which just got a huge chunk of government funding. And then you have some really interesting potential hedges, like Smith & Wesson, which has almost zero correlation to what the broader market is doing. So let's wrap this all up. The market is in an incredibly precarious spot right now. You've got that scary death's door technical setup, you have very real geopolitical risk driving up oil prices, and you have a fundamental crack in the AI story that's been the engine of this market for over a year. And this really gets to the heart of the matter for every investor. It's the central question, isn't it? While market leaders like NVIDIA are stumbling, these old-school giants like Walmart are hitting all-time highs. So, is this chaos or is it opportunity? The key, it seems, is to watch those support levels like a hawk, stay nimble, and definitely don't get complacent.